Well, hello, everybody. Welcome, welcome, welcome. We are the Millionaire Ladies Mob. Thank you so much for joining us this Thursday. And today is March 23rd, 2023. We are going to talk about bank on it. Interesting subject. Things are going around. We're all talking about the banks now. And so we're going to begin in just a second. I just want to make sure we introduce our ladies. My name is Aaliyah Sherrod. I am the healthcare queen. We have Carmen Bernard. She is Carmen. You can introduce yourself, and then Saran, you can introduce yourself.
You're doing a great job.
I know. Keep going.
Keep going. Carmen and Saran, you guys go ahead.
Oh, you sleepy today. Anyways, I'm Saran Baker. And we are the Millionaire Ladies Mob. We're a group of amazing, I can say that, right? Amazing financial professionals, educators, moms, grandmoms, business owners, former corporate educators, you name it, we do it. And we're here. We're going to talk about these banks tonight, right, Carmen?
We sure are. I am Carmen Bernard. And yeah, this is an interesting topic. It's on everybody's minds right now. First it was the layoffs, the massive layoffs by all the big companies. I saw Amazon is laying off another, 8, 10, 12,000 people again. So it's not done. And then, dun, 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 we have banks failing. So it's on everybody's mind. So it is a good conversation to have. So yes, we are going to talk about the banks, but we're also going to talk about some solutions. We're not just dwelling on the problems. So there we go.
That's right.
Wow, wonderful.
Right.
So again, before we start, I want everybody to like, share this video, join us, invite your friends to Millionaire Ladies Mob. We're on YouTube, we're on Facebook. And if you have any questions, you can email us at millionaireladiesmob@gmail.com. So without further ado, we're going to get into this subject about banking. Bank on it, Saran.
Well, you know what? One of the reasons I kind of was throw around this topic when we were talking about what we're going to talk about this week was, I've had people reach out to me, and I don't know if you've had them, clients reaching out, asking questions about what they should do. First of all, they called to ask me about some information or advice they got from Instagram and thought it was a good idea. And so that's probably one of the things. And I think I may have mentioned it last week, but let's talk about it. So one of the things people think is that if the banks are failing and they're having issues, that they should go get more credit right now, right? And I asked this question back to you all, the audience, those who are watching live and watching the replay. So if the banks are failing, what do you think the first thing they're going to do? What do you think the first thing they're going to turn off is? Access to credit.
That's right.
Right? Because they don't want you spending money they no longer have guaranteed or money they can't gain interest on. One of the things that we often talk about, and Carmen, I know you know this well, when we talk about, when we do our debt discussions with our clients, we talk about, well, how does the bank work? So let's go into some basics. We're not going to talk about opening the account, that kind of basics. We're going to talk about how they make their money. So the most simple example is you as a depositor, right? You have money you want to save, you want to hold somewhere safe. Bank is typically a safe place to hold money. Just don't get you don't earn a lot on it. But here's why. You go into the bank today. You put in $10,000, and let's give you a name. We're going to call her Sally. Sally goes to the bank. She puts $10,000 in the bank. Call the bank, whatever you want. Hey, bank, hold this money. They put it in the CD, savings account somewhere. They don't have to do much to it. It's there. She leaves. She's gone. Bank's holding her money. The bank then takes that $10,000, loans out $9,000 of it 10 times to 10 different people, right? They hold $1,000 in what they call the reserve, but that $9,000 of your money they've taken and they've multiplied and they've loaned it out 10 times and charged 10 different interest rates and credit cards, home equity lines of credit, car loans, mortgages. Did I say credit cards? Credit cards. They've loaned that money out. So they're getting 24%, 5%, 10%, 19%. you name it, they're getting all these different percentages on your money that they're just holding for you in trust, basically, because you're insured up to $250,000. They're holding it for you in trust, if you will, but they get to loan it out. So essentially, well, let's be clear, your money is their product.
That's right.
They don't have their own product. Your money is their product, right? And so they're using your money that you got up at 5:30 a.m. to go to work, to get dressed, to get in traffic by 6 o'clock, 6:15 in the morning. I mean, I don't know if it takes you 45 minutes. When you get up that early, you take as little time as you need to get dressed.
Mm-hmm.
But to get yourself into traffic, and I know Carmen's in Atlanta to get in Atlanta traffic, Aaliyah's in California to get in California traffic, I'm in DC to get in DC traffic, to go to work for 8 hours or 10 hours or whatever the time frame is you work, to earn your money, then at the end of the pay period, get paid after tax, and then you find a way to save up $10,000 for the bank to hold, figuring you're going to make some money, but the person making the money is the bank.
That is so right.
And that is why when you look at things like the SVP, we won't go into too much detail on it, but the Silicon Valley Bank failing is because just in that simple example I gave you, they overloaned the money. And then depositors said, hey, something might be happening, came to pull out their deposits. So now they don't have anything secure in that money they loaned out. The companies that they lent money to, because they were lending to IT tech stock companies, startups, things like that, which typically will, they run at a loss sometimes in the beginning, but then they regain, but they're good investments because we see where technology going. Technology is the world we live in, right? So they have some ebbs and flows with how their cash flow comes in. And so they're not always automatically solvent. And so now they can't make payroll because they got their money borrowed. The banks freeze all their money, their access to cash, and boom. And then there's a mass panic because now we have information going out quickly. So people are like, wait, I got $250,000 in there. I'm going to get it. I got $500,000 in there. I'm going to get it. I got $1 million. They're going to get it, right? Which is why Uncle Joe had to come in and say, listen, we're going to protect the people who made the depositors, right? And so for people who don't understand that, that's me, you, Carmen, all us regular people who aren't the businesses that they were loaning to and doing the deals with. They're making sure that if we had more than that 250,000, that we are we're solving, right? Because to be clear, FDIC only insures $250,000 per depositor, not per account. So if you got 5 accounts with a bank, we don't have to name any banks particularly. If you got 5 accounts in the bank, you got more than 250,000 collectively over their accounts, they only insuring 250,000. And so that's where we come in when we start talking about, we've been talking about it ad nauseum at least a year. I think next Thursday is our year anniversary, ad nauseum, about protecting our income.
Well, I want to go back a little bit in the whole scenario that you set up for them to listen to understand how the bank works. A couple of quick things. And number one is, like you said, you've worked hard for that money to put the money in the bank. And most of the times you're putting the money in the bank is because you expect that this money's going to grow for you. Mm-hmm. And that is myth number one. Even with now that there is increased interest rates, because the banks typically giving you less than 1% on your money in a savings account. Okay. And so that's the first red flag. But we want to put our money somewhere where we have been taught to put our money. We've been taught to work, make some money, and save it in the bank, mm-hmm. right? Back many years ago, you could get a decent return on an account, but that hasn't been like that for a while. So number one, put in your money in the bank. You're not getting back those types of interest rates that the bank is going to charge you or charge the next person that walks in. They're dealing with that spread. They lend it out to you for less than 1%. And they can earn 23% more on it when they lend it out. So that's one. That's one thing. Number two, in the last administration, there were some things done that lessen regulations on banks, lessen the amount of money that they had to hold in reserve. And as such, and their banks are like, what? We don't have to hold all this. Well, we're gonna figure out something to do. So they got over leverage, right? Not just because not just because they lent out those people money, but they've invested in certain things. They invested in long-term bonds that were paying 1.2%, 1.3%, and now they got to hold that to maturity, and that's all they're going to get. Well, like me and you, right now, if we see that our money is someplace, excuse me, and we are not making a good return on it, we want to move it to someplace where we can make a better return. So they figured, hey, we could take a loss on these investments that we have done, and we can invest that, in something else that's bringing us back higher returns right now. Well, the thing about it is that you can't kind of do that in secret. So when people see that the bank is now selling their assets at a loss, they're like, oh, they don't have any money. So
Right.
so there's a run on the bank. Let's go get our money real quick. And so everybody rushed to the bank, and that's what happens. Hence the collapse, right?
Right.
And so that's another thing. So as you listen to us tonight, think about those things. One, you're not getting a respectable return on your money, period, on the bank. Yes, 250,000 of it is quote unquote safe. Two, the banks, like Saran explained to you, you are the product. Your money is their product. That's what they use, and they are going to see how much of that spread that they can get. So that's the second thing. You don't get that. And then number three, when you go in to even get some of that money, it doesn't matter if you got money in there, right? You want to qualify for a mortgage, you might have $30,000 in their bank. They don't care. You got to go through all sorts of rigmarole in order for them to get that money. They got to figure out if you got a job. They got to figure out how much you spending. They got to figure out if you ever missed not paying back somebody before. You got to figure. Then you get a structured payment that you can't miss because you got to pay it when they say to pay it. Yep. And then if you look at because of how those loans are structured, if you look at what you're really paying back, I mean, in the cost of the interest, it is super high. It's not the 5%, 6%, or 12% in those first couple of years because you're paying back mostly interest because the bank has to get their money back first. So these are all some of the things that we got to think about when we're using the bank as a tool.
Right. It is absolutely a tool.
Right? As a tool. And so, yeah, these are some of the things that we got to think about.
Mm-hmm. Can I say something?
Yeah.
I was thinking about, as you guys are describing how banking works, I'm thinking, is that not some, I'm just going to say gangster stuff?
All right.
Gangster. I'm going to loan you some money. You're going to give me the money. I'm going to loan it out 10 times. This is legal.
Yeah.
Legal. It's
regulated.
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 I'm sitting here just, my mind is going like, how can I figure out how to do something like that?
Exactly.
And we've talked about this multiple times. We have ways to help you get some things set up. But I want to say this too, to what Carmen was saying, Aaliyah. And the thing is that you said the bank's selling off their assets at a loss. And for many people, they're like, oh, assets at a loss. They may or may not know what that means, right? Mm-hmm. And so to oversimplify it, it's basically like you have maybe you have a collection of designer purses or designer shoes, and you know they're worth a certain amount, but you need to make money fast for whatever. And so you're willing to sell it at a discount, essentially. So maybe you have a Louis Vuitton bag, and you know if you sold it at retail. Even used, you can still sell it for $1,500 to $2,000. But because you need to make the money, you go ahead and sell it for $800 or $4,000, or way less than the value. Or say you have a coin collection. Maybe you're a coin collector or a stamp collector, or maybe you have an amazing Barbie collection. I know a lot of women have really dope Barbie collections. I have one Barbie collector. It's worth $1,000 and it's not leaving where it's at. But, even in that example, you have it, but it's like, I need to make money. I know I can make $1,000 on this one Barbie that I have, right? But I need money. So if I can find somebody to buy it from me for $750 or $500, which is probably more in their budget, I'll take the loss so that I can get the money. And that's essentially what the bank did with their assets, is sold it off. And the catch is, and I know you mentioned this earlier, but I was watching the news because I was stuck at the dealership getting my brakes today. So I was watching CNN. Y'all know I don't watch the news, but I was watching CNN. And the good old Fed raise the rates again, right? Yeah. So savings rates are up to like 5% or something like that, right? But I want to put a pin in that, and let's say this, because many people don't know this, and I think we've mentioned this before, but it's worth mentioning today when we talk about banking on it. Who is the Fed Reserve? The Fed Reserve
is that Paul?
It's Paul barking at something, right? The Fed Reserve is the president of the 12 largest banks in the United States. It is not the federal government. That's what the Fed Reserve is. So the bank that's going to loan you the money, you can see what I said, right? You can see what I said. The bank that's going to loan you the money decides how much they get to charge you to loan you the money, right? Mm-hmm. So now you want to get a mortgage, it's 6%. 7.5%, 8%, super high, right? I got mine at like 2.5% or something crazy like that, right? But they get to decide that. They also get to decide what the interest rate is they're going to pay you on savings. So the savings rate, even though it used to be 1% and it has gone up, but why has it gone? I just watched it on CNN. So let me finish this point. Why has the savings rate gone up on savings accounts and CDs? The reason it's gone up is because the banks want you to feel more comfortable putting your money into their secure products like savings accounts, CDs, and things like that, because that means they have more products. Because if I can get 5%, 6%, whatever the number is, it's much higher than 1% now. You can Google it real quick, Carmen, but I just watched it on CNN. And so for some banks, it is a little bit higher right now. But the thing is that is to bring back your confidence that you can save your money here safely, because the more people who save, the more money they have when they do get ready to loan it out that they can make on it, because they've already increased the interest rate for you to get money. So there's a win on both sides. It's not really to deter you. It's just to charge you more. The same credit card you have right now, as they raise the rates, you're going to see that you're going to end up, it's going to take you much longer to pay it back because the interest rate is higher, and you're going to pay more for that debt to go to be zero, especially if you're just making a minimum payment. It's a real game. And if you want to know the game, and I watched this movie over Christmas, and we talk about this, you hear people talk about it all the time. It's a great Christmas movie. You have to watch it. I finally stayed awake long enough to watch it this Christmas. It's a Wonderful Life.
Oh, okay.
It's a Wonderful Life. Really, the guy who was in the movie, not to kill the plot, this was like the beginning of mortgage banking. This was like the beginning of mortgage banking. The guy was going through this whole crisis with trying to get started with people building these houses, and him giving the money and them having trust. It's essentially similar to what SVP happened. The people lost trust. Everybody went in the same day, wanted all their money out. Well, he couldn't pay. And that's how he got stuck. He couldn't pay. And then he figured out a way to write people notes. Literally wrote them a note. This is how much I owe you. This is how much I owe you. This is how much I owe you.
I'm good.
You gotta go watch it. Like it's really boring in the beginning and like really boring at the end. Yeah, but like in the middle, you get to like if you got the financial mind like we do, you get to see like, wait a minute. He was building a development. He ran out of money. The neighborhood find out. They said, this dude don't have no money. Let me go get my money out of the deposit.
Wow.
He can't pay. He in there literally giving out slips. I'll pay you later. Just let me hold where we at, right? And that's essentially what we just experienced with SVP. Is they're like, wait, and that's why the government has to step in, write some more, print some more money to try to solve this problem, if you will, which will essentially result in some type of inflation, which is why they allegedly keep raising the rates, because they're trying to control inflation, but really it's creating more panic and stress for us, especially for us everyday people who are just getting up and we're just going to work, just trying to take care of our kids, just kind of make sure our spouses are taken care of and keep food on the table and keep working, right? And Carmen mentioned it earlier. We got people at some of the companies that make some of the highest incomes in America losing their jobs. How do you think that's not going to affect the economy?
Right. But let me say this. The whole thing, and you guys, if you're listening to me, you could go ahead and say I said it. The whole thing is a scam. The whole thing is a scam. All right. Because you just talked about that movie, but that's exactly how everything works. Because there was a time when our money was backed by real something, gold. It was really backed by that. And so if you lent the government money, right, you know, well, or you lent the money to wherever, you knew it was backed up. Then these people figured out that they had more money out than they had whatever, so we had to quickly change the system, right? Mm-hmm. And so now the money that we put out there is backed by absolutely nothing except the reputation of the US dollar.
That's it.
It's backed by absolutely nothing, right?
I don't know what they did with that gold we had. Where'd it go?
So that's how come this note, just like you talk about the note, it's basically what they're doing right now. You give us this, and it's a whole bunch of ones and zeros. If you're in computers, you know that this thing is a whole bunch of ones and zeros that they just plug in numbers. They're just playing with our lives. That's exactly what it is. And I didn't mean to disagree with you, Saran, because you are absolutely right. They have minimally increased rates, but when we're talking about things like savings accounts, those rates are still down. Largest bank, Bank of America, 1%, right? And most of those is reserved for those high yield accounts where you have higher balances. Otherwise than that, it's 0.40%. And then if we
I'm looking at it like you could get an online account at Marcus Goldman Sachs for 3.75 for savings.
Now that's good, but how much money? What's the minimum balance?
It doesn't have. It has a zero minimum balance. And
right.
I mean, and again, it's not about the disagreement, but the thing is I don't want people to Google and be like, she said 1%, but I see 3.75. And I see, but look, SoFi Bank, which is an online bank, if I'm not mistaken, is 4%, but you have to have direct deposit with them. But again, it's not a lot of money in the grand scheme of things. It's just something to be considering because there's no protection for it. There's no downside protection. There's no guarantee for the interest. And at the end of the year, the bank's going to send you a 1098 form for that interest that you earn, that 4% interest that you earn on that money. And it's not and it's simple interest. It's not compound interest like you pay on your credit card. And so that's how the banks win. That's where this is a very interesting process, scam word you want to use, comes in because when you go to save your money, they give you simple interest. When you go to borrow money, they charge you daily compounded interest.
Right.
But when you save, you get annual simple interest. Yeah. You pay daily compound interest. And anybody that wants to challenge that, go look at your credit card and look, it's going to go pull up the statement that you never see because you have it gone green. They convince you to go green. So you never see anything but the balance. Pull up one of those statements online. You'll see daily interest, weekly. You're going to see they have to break it down on there, thanks to Obama, that you have to break those things down on the statement. But the workaround is you never see your statement.
That is
So
true.
you
Right
never
now,
see
that's
your
true.
statement. You never really. I'm sorry, I had moved my thing to the other side, and I realized I wasn't looking at the camera. So if you never see your statement, you never realize the amount that you're paying. Same thing with mortgages. We get these from the bank. They make sure before you get a mortgage that you're solvent, and the reason they do that is they're looking at your earning potential for the next 30 years. You're looking at your earning potential by hour, by week, by paycheck, and by year. They're looking at, oh, you said you make $50,000. Well, over the next 30 years, you're going to make, what's the number? You're going to make $3 million. No, I think that's wrong. $2 million. You're going to make $2 million over the next 30 years, right? Oh, you make $100,000. You're going to make $3 million over the next 30 years. So you can afford to pay this mortgage for this house that you bought for $200,000, but with interest, you're going to end up paying $6,000 or $800,000 for that house. And that's why they do it. We're not looking at the numbers close enough. And the way the system is set up, it's like, so don't buy a house?
No.
But yeah, buy the house, but work with a professional who's going to help you figure out how to beat that system and get you out of paying that extra
that
$400,000 to $600,000 in interest when you really only meant to pay $200,000 for the house, which is enough, which is a lot of money too.
But Saran, what an effective tool! What an effective tool to pretend like it's not theirs. You don't see it, so it's a pretend like they don't see it. It's not there. And I remember back in the 80s. When we were buying houses, the interest rates were 15, 16%, 17, 18%.
Oh yeah.
I remember those days because my father was in real estate and the people were panicking and the interest rate was the gas shortage. There was a lot of things going on, similar to what's going on today. However, in the 2000, 2004, 5, 6, 7, interest rates, we were able to buy a house at 5.5%, 6% interest rate. And we were thinking that was great. And now today, then it went down to what? 1%, 1.5%.
2.5. I think I got 2.5.
And so now there's cycles that it goes through and things happen. But just think about it. Those loans that were taken out in the 80s at that high interest rate, the people have more than likely paid them off or refinanced it. So they don't have that money to bank on there because now those interest rates that came in 2001, 2, 3, 5, 6%, those are being paid off. And then people are getting 1%. So where are we collecting this money, especially on the huge ticket items, which are homes? So that it's just a circle that keeps going around and around and around. I have a 0% interest rate on my car loan. They're not making any money off me.
You think
they charge you a higher rate for that car, though,
based on the car, the cost of the car and what it really was. But
so just because you have a zero interest rate, don't be fooled into thinking the bank has not figured out a way to make money.
I'm sure they have.
They're masters at that. That's what their job is. And so even when we get these good deals for us, there has to be something in it for them. They're not just giving away this money.
I have been getting messages to refinance. Do you need a new car? Do you need this? I don't need nothing. I don't need anything. I have a car.
Yeah. And then, like some of the other products, and that's what people can look at as well. There are other products, right, that we had shied away from using because basically it tied up your money for so long. But now those products are where you're now getting 5 and 5.5% interest rates on it. And if you're not using that money, it's a smart money move,
It is.
It's that's all you have, and you couldn't do some more of the more advanced strategies that you use. But it's a smart money. Have 30, 10, 20, $30,000 sitting, 15, even $5,000, because many of them have I don't want to give banks the whatever, but many of them they're not paying me. If they send me a check, then I'm gonna say it so people could run to their thing. But many of them have certificate of deposits, CDs, certificates at the credit unions and stuff like that that, you can put that money away for 18 months and make a guaranteed 5% or whatever. But guess what? You're going to be taxed on that money, right? So when you listen to us, you got to look and listen to all the different benefits that we're talking about. And that's some of the things we said we'll talk about today in our in this thing. We were gonna talk about what's going on in the banks, but we were also going to talk about some of the solutions, some of the things that you can do, because you are not at the mercy of the bank only. You're not, right? But you do need to be willing to unlearn some things and be willing to relearn some new things, And I certainly understand the people in our community. We've been lied to for so long. Information has been held away from us. So, and then people try to scam us and things like that. So we want to be able to protect ourselves. And that's the reason why we say research, do your research, read, speak with a financial professional, and don't just accept everything at face value, but also don't just shun away everything. Everything is not, and I know I said earlier about this, but everything that we are sharing with you is not a scam. Nothing is not a scam, but everything that you come across isn't a scam. So we have to be willing to learn. To unlearn some things in order to relearn some.
Well, I like that you said that, because one of the things that you think about when we start thinking about the actual banking system, one of the reasons we don't, question it is because we've come to trust it. We've come to understand that there's protection, it's government backed, and we feel safe, right? But we also have not taken the time to learn how they work, because it can be confusing to the average person, because the average person doesn't have time to figure out a whole other industry on top of their own job, on top of running their own family, on top of doing all the other things that they need to do. And so, but the thing is this is the one area of our lives, when you think about it, you really need to, you don't even get that much education about how all these things work in school. From pre-K to high school, you don't get any understanding of that. You don't really get it in college unless you like a finance major or somebody in the accounting, but you still don't really get the full understanding of it, because essentially the way our school systems are built, which were built during the Industrial Revolution, and John D. Rockefeller talked about it. He said, I don't need a nation full of free thinkers.
Exactly.
I have to find the quote.
I have to find workers.
They need workers. And so
exactly.
The thing is that most of us have been trained to be similar or the same, as different as we want to say we are. We've been trained under the regime. Now, I will say this: the cheat code for the generations after Gen X, I'm Gen X, after our generation, is that the cheat code is that the internet has made so much information available to the generations after us, starting in the 80s when things started to shift. There's so much in there that those generations are debunking a lot of the stuff that we were just told that this is how it is, right? I'm still trying to shake off some of that Gen X juju that, that we were kind of taught from the boomers, right? But the thing is that they got the cheat code. Why should I go work somewhere for 40 years, 40 hours a week, for 40 hours a leave? Why should I be on the
40% of your salary
and then retire with 40% of my salary? Why should I do that? Why should I make triplicate copies of something, then scan it, then give you a hard copy? And why should I do that? Why can't we just do it efficiently? You got a computer in your hand, use your iPhone, right? You want something, scan it and then upload it, and let's keep it moving. Why are those things? But the thing is that some of these things are to specifically confuse us, frustrate us, and make us give up on trying to figure it out. Because if you crack the code, they can't manipulate you anymore. They can't use you. You're constantly going to be finding ways to do things. We got to shout H out in the chat. Hey H. He's in the chat. Hey H. Wave. But the thing is that when we start to learn when we start to learn new things, I know you said relearn, but when we start to learn new things after we unlearn some old stuff, or even if we don't unlearn it, but we learn new stuff that can replace it, then we like, oh. And so when you sit with one of us and we provide you with some solutions that protect you from downside losses, that guaranteed, that will give you that you won't outlive, that can be transferred generationally, that will help you to be able to move forward and give you lots of different options. And if you do it a certain way, you could potentially set up a system where you're loaning and you're loaning yourself money, or being your own bank, or becoming a private equity investor for yourself. When we tell you that and you think, oh my God, this has to be a scam, what's the difference in what the bank is doing? What's the difference in what the mortgage that you have? What's the difference in the plan you have to work the 40-40-40 plan at work? I never heard a scam. You 40-40-40 is somebody offer you opportunity and you think it's an MLM. We're the good MLM, Millionaire Ladies Mob. You think it's an MLM. Why do you think that's a scam? Because you got to do some work.
Yep.
Because you got to do something other than go sit at your desk and wait for it to be 5 o'clock after you get paid. So because now you have to get paid for results versus your time. Give me the opportunity to get paid for my results, and I want to choose that option all day, every day, and twice on Sunday, because I can figure out how to create results. But I don't want to keep wasting my life away showing up somewhere I don't want to be, sitting behind a desk for as long as I have to, and not being able to be my full self. That's just me. I learned that from the generations behind me. I had to pick it up from some millennials and some Gen Zers, because guess what? That's not what was given to me. That wasn't the programming. And I'm going to use that word. That wasn't the programming that was passed down from my parenting, from the parentage that I did receive. And so that's probably true for many people. The question then becomes, what do you want? Not what society wants. Everyone always tells us we should have a house, 2.5 kids, a dog, a fence, a white picket fence with a cute little house on the corner. If that ain't what you want, then create your own dream. I want a house in lots of corners of the world. So I want to be able to go lots of corners of the world and hang out, right? It's not necessarily always a white picket fence somewhere, but I want to be able to pick my bag up and go across the world when I want to. You know, that's a dream for me. I don't have a whole bunch of other stuff, you know, but the thing is that we keep letting someone else tell us what our dream is. And the more we listen and allow ourselves to be programmed, the more we suppress what really was already oppressed upon our souls when we came into this earth to walk this life that we wanted to do. That's all I got. I'm gonna get off the soapbox today. Y'all
Oh my gosh. Yes. So, I mean, I'm sure they're loving you on the soapbox because you're sharing some good nuggets tonight. You're talking some great things. And you know, to tell you what are some options that you have to do, the things that we show you to do. Saran mentioned it a little bit, figuring out how to be your own bank. Well, what exactly does that mean? Now, what we want you to understand is you have the opportunity to take that same money that you were putting in the bank and get in that less than 1%, now maybe 1 to 3%. And I'm talking about the savings account. The CDs are a little bit higher, but even for what we're talking about long term, that return, although I am not going to sit here and say it's guaranteed, but the return that you're going to get is going to be much higher than what you're getting in the bank. That's number one. That's the first thing. The second thing is, yes, can you go out and use that same money and put it in the stock market? But you guys seen what has been happening with the stock market lately, right? Yeah, you can get 10, 12, 20%. However, you can lose 30, 40. You can lose your shirt. You can go below zero, 30% of your net worth, or your money that you have exposed in the market. If you don't believe me, go back to 2008 and you will see that those people's 401ks turned into 201ks. You will see that. You will see where
201k.
I don't know where she comes up with this stuff.
you will see that money quickly disappeared. And even if, and this is something that I have to kind of mention right here, right? Because most of us would think, okay, you know what, I lost 50,000, right? And then the next year I gained back 50,000, and people are thinking, oh, I'm even. No, you're not, right? Because if you had 100,000 in there and you lost 50,000, that means you lost 50%. Now you gain back 50%. You are now at 25. You are now at 75,000. You're not at 100,000. So you're still behind the 8 ball. And what we offer, what other tools and vehicles we offer, there's no time where you would lose any money. Your money, once you gain that money, is locked in. What is even more powerful is that now you can use that money while it's still growing. That means you can go take it out, use $10, $20, $30,000 to buy an investment property, right? As long as you have $10,000, $20,000 in there. Don't be like some of my clients.
Let's just call it spade. You got to have it in there.
Don't be like some of my clients now that they paying like $10 a month for insurance. And by the way, you can't pay $10 a month for insurance. I will just let you know. But they're paying like $10 a month for insurance, and they come about, oh, can I get a loan off of my thing? No, ma'am, no, you can't. But you can now take that money out and use that money to make more money, all the while your money is sitting still growing. This is what we mean. This is what we mean when we talk about being your own bank and doing private banking. This is what we mean. Because sometimes we kind of we don't want to get deep in the mire for this particular thing, but I feel like we need to give you a little bit more something. You hear us say private banking or infinite banking, but you're not really sure exactly what that means, right? You hear people tell you, and like Saran told you, there's so much information there. If there's so much information out there, but now we need a way to basically be able to sort through it. So I'm giving you a little bit more of a nugget so that you can kind of understand how this private banking works. So the next thing, now that you've borrowed that money, or now that you've taken out the money, just like you would have gone to your bank and borrowed the money to put it in an investment in something else, you don't have the bank will say, you got to pay me back $1,000 a month, and don't be late, because I'm gonna charge a late fee, and I'm gonna charge a penalty, and I'm gonna charge this or whatever. You don't have to pay it back like that, right? We always advise you to pay yourself back, because if you can pay other people back, why won't you respect your own self and pay yourself back, right? And when you're paying yourself back, you're taking care of that future person, that person that's waiting for you to do something so they don't have to be at the Walmart checkout, walking in and checking receipts or whatever. Those people that I walk straight by, because I already spent a whole bunch of time in Walmart. Then I had to work for Walmart in order to cash out my groceries myself without any training, and they didn't give me no percentages off or anything like that.
First of all, I do not go to Walmart anymore. I go to Target.
Now you want me to wait? All of them doing it now. All of them doing it. Now you want me to wait for you to check some 80-something-year-old person that should be playing with their grandchildren to check my receipt? Call the police, because I'm out. So I'm just saying, you don't have to do that, because now you're doing something to take care of your future self.
I love it.
I'm going to come off the soapbox.
I love what you said, Carmen. You said you can borrow money out of your life insurance policy. You need to pay yourself back, but it's still in that policy growing. Who does that?
Yeah.
That's
well, I want to add this, Aaliyah, because the thing that popped in my head as Carmen was talking was that when you start talking about the infinite banking, and I'm not gonna name names, but there's two very prominent financial people who always say stuff, and I get people who say, but such and such said, this man and this woman said we should do X. And I always ask people this: and I'm upfront. If you ask me how I get paid, I'll tell you, right? Do they tell you how they get paid on what they're telling you to do?
Exactly.
And a lot of times we have to start thinking a little bit more when we're working with folks about how, no, you can't H. Don't call their names in my chat. Don't call their names in my chat.
Exactly. Call their names.
We have to start thinking about how people are getting paid. What endorsements what endorsement deals do they have? What ties do they have? Where are their stocks at? Where are their investments, right?
Yes.
And because at the end of the day, a lot of things most people do, they are invested in some type of way. And that really becomes the thing that, it's not always easy to, now he gives an issue. It's not always easy to, question certain things. Because this is an expert and they are experts in their field. No, hands down. I'm not challenging that at all. What I'm saying is ask the question, is that what's best for you? What's going on in your life is the question. And even what we're saying to you today about different things. What's best for you, what's going on with you is what should be handled. When we're taking blanket advice from someone talking to a large platform, how can the same exact thing be applicable to everyone?
I'm going to tell you how.
Situation. How?
I'm going to tell you how. Because it's deeper. It's deeper than that. It's way deeper. If we were to do what they do and not what they say, then that income gap, that wealth gap would go all the way down. And who wants that? Who wants that for us? So why would they tell you how you can really do that? Why? Why would they tell you how you can really pass wealth on to the next generation, which is what they have been doing for years? Mm-hmm. That's exactly how wealth gets passed down, except in our community. So correct. Why would they clue you in that that's what you're supposed to do? They tell you, they tell you, you don't need that. You don't need that when you're in your 80s or whatever, so that the next generation has to start over. Their generations are not starting over.
None of them. But the thing is that I know, and I mentioned him earlier, but when Rockefeller says we don't need a nation of free thinkers, and that's not the exact quote, I'm totally paraphrasing, but that's what I got out of what he said, right? But the thing is that why not? Why don't we need that? Because at the end of the day, what happens is when you have people who are able to think for themselves and make decisions for themselves, then these free thinkers will then choose not to do what the masses do, choose not to follow the norm. And don't get me wrong, there'll be a certain amount of chaos, but it'll be manageable, right? Because we'll still have some rules and some guidelines which we need to follow, like don't go around killing people, don't steal from other people, don't hurt other people, unnecessarily, follow the speed signs, follow the traffic signs, safety, don't do crazy stuff to children. Even we have those rules and people do dumb stuff to kids anyway. Don't do crazy stuff to children. But we have those things. But what would the world be like if we were able to be more free in a lot of different ways and protected, more protected than we are? Also, because I was stuck at the dealership watching CNN, got to watch the hearing for the TikTok.
Okay, yeah.
And the CEO for TikTok was ill prepared to handle the Americans who, in my opinion, had the American Congress people who had an agenda to really kind of rip him a new one.
Right.
And he was not ready for it. He had all his facts, but he just wasn't ready. And I was like, dang, he's kind of getting his behind handed to him because he ain't ready for the kind of conversation that they're trying to have.
Right.
But the thing that came to my mind was this, and I don't know the answer to this, is what are they trying to hide from us? And I don't know if TikTok's bad or whatever. I know it's a lot of small business people making a lot of money in America on TikTok. That I do know, right? So what's the problem with that? Now, the data and all that stuff, I don't know what data it is they're worried about leaking, so I don't want nobody coming after me because she's clueless. I don't know what the data is they're talking about. But what I do know is that TikTok is a vehicle for small business owners. and medium-sized business owners who are able to get to audiences specifically who want to see their content, who want what they have to offer, and is allowing people to move themselves from poverty to prosperity and to put themselves in a place to create a new world for them and their families, right? And that I do know, that I have seen it, because we are connected to people who do that in our industry. And so my question is, he needs to use, you do use TikTok, H. You always like my videos and I appreciate it. Be sure to share them. But, and it's TIK.
He's on there, but he's not using it so well.
That's my guy. I tag him. I tag you all the time because I know you're going to comment. But the thing is, at the end of the day, what's the real threat? Like, what are we trying to hide?
Exactly.
What are we trying? And I'm not saying that any other country should have access to American data. Not saying that at all, because I understand, all the rules of protecting data and preventing fraud. I understand it way better than most people, because guess who has an auditing background? Me. Guess who has a fraud certification? Me. So I understand it, right? But the thing is that, like, what is this data that they feel like is being leaked with people dancing, singing, selling crystals, selling wigs, watches, financial, giving financial education. And maybe there's a dark side to TikTok I'm not privy to, because again, the one thing I love about it is that they give me content I want to see, not what they want me to see. Because on Facebook, I can make a post to try to get to the people who are actually my friends, the 3,000 people who are actually my friends, and no one sees it.
They never see it.
Right.
But if I post it on TikTok, I got 500 likes with people I ain't never met.
But listen, so a lot of, that's right, H. We also got
the anti-money laundering certification.
We do lots of different fraud classes and everything like that. But listen, though, right? Yeah, I guess I'm with you when you're talking about that, because they're I guess they're looking at the back doors of how these people can come in and get information, and they're not really looking for it from me. But it's not like the government bought military uniforms from the freaking Chinese, and the Chinese people bug their shit, and excuse my language, and then they're all upset. But why would you do that? And you weren't but TikTok? Like, what?
Wait, say that again. What happened?
They bought the military uniforms
from China.
Who?
The U.S. military.
They bought Chinese military uniforms or United States?
Is there anything that's not made in China?
No. Okay. I got these glasses from China. Aren't they nice?
Yes, they are. And they're probably collecting secrets right now and sending them back to China.
Okay, well,
conspiracy theorist.
Hopefully they can make me some money too.
Right. But what I'm saying, listen, I'm like, lay off my TikTok, because I was having some pains and I found out on TikTok how to fix it. My doctor of TikTok told me what honey and ginger and cinnamon and whatever I could do. So yeah, my doctor on TikTok, I don't know what her name was, but she said it. And I went in the kitchen. I had all the stuff. I made it, and the pain is gone in a couple of days. So it's for inflammation. So they need to lay off my TikTok, because they say if that man don't sell, if the Chinese don't sell as some of their shares or whatever they have in the United States, they're gonna block them. Leave these people. Figure out a different way how to protect your spies. That's right, TikTok for life. I wanted to go back though. H said that he told the JP Morgan branch manager today, while he was doing an annuity transfer for one of his clients from her bank. He was talking to that manager, and the manager had no clue what infinite banking was or what living benefits were. And she's working right there in the bank. So there again, right? And most people that work in the bank cannot explain what we are explaining to you. Most people, they have no clue. And if they actually listen to us, they would be doing some of the things. They can only tell us from what they were told, right? They haven't gone through the training that we have gone through. They don't have the product to be able to say how it works. They have none of that, right?
Again, it goes back to the statement. If you have a nation of free thinkers, because even the people at the bank, they're taught what to think. They're taught what to say. There's a script for what you say and how you respond to things. Most places that we work, we have a script, how to respond to certain questions, inquiries. There's always the same, there's always the line that you have to explain, the guidelines or whatever you want to call it. But that's the way that we are responding to things because we're trained to do it
in a certain way. And it's basically you are you said the word earlier today, but that's it. We are all what is the word I'm looking for? Because we're programmed, right? We're programmed, and it all starts in elementary school, and we're all taught to think as workers and producing things for others. That's how we're taught to think.
And it was also taught when we were brought here as slaves, you couldn't read because you couldn't think for yourself. Now reading, you start reading it. What does it do? It opens up a whole new world for you. So start thinking about these things we're talking about. Find it for yourself. Look at, read it, see what's going on, and become an informed consumer. Become informed, and then you'll make wise decisions for yourself and your family. And your family, 2, 3, 4 generations to come. Like we're still saying Rockefeller. How many generations was that back then when Rockefeller was around? We're still saying about Rockefeller. His name is indelible in our brains because he created a legacy for his family. And they didn't want free thinkers back then. That you could not read, you got your hand cut off, your foot cut off because you were not supposed to learn how to read. And now if we pick up a book and we read it and understand it, and if you don't understand it, ask someone. Because
and you know what, not to plug it because I'm not getting paid for it, but they got a whole book. What would the Rockefellers do?
Oh yeah.
I got it.
You know what? We need to do a book. What would the Millionaire Ladies Mob do?
Let's do it. Okay.
We can do a compilation.
That's great. Oh goodness, it's an hour.
H says at least 5 generations. We can't ever get together and talk for a little bit. I want to see the day we say we're going to come on here and do 30 minutes. By the way, H says he wants us all on his show. It says it's going to be a great foresight.
I don't know if all of us should be on the show with H because H is a little off the chain. I love him. He's my favorite Dominican, though.
I love all his posts. That one.
I just want to know. H always says "kamen." I want to know what that means. K-A-M-E-N. He always says that.
He's saying K-man. K-man.
Oh, is that what that is?
Oh, that's what he said. I have no idea. I'm a freaking foreigner. I didn't know what it means. K-man.
K-man. Oh my goodness.
It's a dialect, like you saying, like you were telling us, like in Guyana, y'all say good night to say hello. Well, we say good evening. Like you say good night. It's like, hey man. Yeah, he's like, you know what I'm saying? Hey man.
Okay, so you know what I'm saying? Oh, that's what it means. You know what I'm saying?
You know what I'm saying?
All right, gotcha, H.
Love it. Well, it's been an hour. We are just about at 6:30 for me, 9:30 for you guys, and we're going to wind down. We thank everyone for joining us. H, we really appreciate you. I love everything he does, and we are all part of the same industry. So let's talk about next time, maybe if you are looking for ways to create extra income for your family, you need to be in the industry that we're in. We are not always hiring, but we are always looking for people, women especially, and those who want to increase their earnings and make a living and help people while they're doing it. That's the key. So we thank you again for coming with us. We're going to say goodnight. This is the Millionaire Ladies Mob. I'm just going to say I'm Aaliyah Sherrod, the healthcare queen. We have Carmen Bernard. You can reach us all at Millionaire Ladies Mob, and we all have our first name and 10K.com. And you can reach us at any one of those.
Yeah, we're the 10K queens.
That is right.
I don't know about all that.
Did you want to say something, Carmen or Saran, to go?
No, I enjoyed this. I enjoyed tonight. H, thanks for joining us, and the others. Thank you guys for joining us. Please, please, please If you got anything from this, just kind of comment, share, like. If you caught us on a replay, listen, because you missed some great things. Go back and listen. That's right. He said 10K.
Oh, I love it.
We gotta bring H on so he could talk. He can talk that Dominican. Maybe the ladies will come and look at him. But he can hang a suit. He can hang a suit.
Oh yeah. He knows how to clean up real well. He does. He does know how to clean up real well. So yeah, he could come on. He could come on our show and hear me cuss when I get upset. But
and don't forget to join our group. We go live in the group. We have support in our group, Millionaire Ladies Mob. You can find us on Facebook. You can join our group. Be sure to go there, check us out. You can converse with us one-on-one there, ask your questions. So we would love to have you be a part of our group as we are growing and moving forward. So you want to make some more money? We're here. But in the meantime, you know me, peace, love, and light. Let's get the money right.
Everybody, good night.
peace.